Hi, folks. I'm best-selling author and certified tax specialist Navi Dowty. Welcome to my channel. As you know, in this channel, we're going to talk about the three coming financial tidal waves and how they conflate together with the 78 million baby boomers retiring. And if you're in the retirement hot zone, you really need to listen to this. On this video, we're going to talk about one of the things that's in the news all the time, and that is rising interest rates. How will that affect your retirement, and what are some things you can do about it? As you know, I told you the story of me sitting in the little cafe back in 2016 in New Zealand looking out at the crashing tidal waves, and that was one of the things that prompted me to start this channel. So, rising interest rates. Take a look at this picture. A few years back, I gave a talk to a group of business people up in Boston. And people come in all the time, and I ask them questions about their retirement plans. How are they going to convert that big pile of money into income, which is what you really need in retirement? And what they frequently will say is, well, I don't have a crystal ball. So what I did was I made a picture of my crystal ball for this talk I gave. See what you think. If you look at the first half of this crystal ball, between 1965 and 1982, you'll see dramatically rising interest rates. Prior to 1965, the Federal Reserve's job was to protect the value of the dollar. After that, and ever since then, they've changed their mission, and it is now to try and manage the economy. So they allowed interest rates to rise during that time span. Well, what happened to people's investments? Real estate did great. Paper assets, however, were a disaster. When I say paper assets, I'm talking about stocks and bonds. I was one of the first certified financial planners back in the early 80s, and the marketing people came around and wanted to sell me advertising. I always remember this one guy said, whatever you do in your advertising, or talking to people for that matter, never use the words the market. Never say mutual funds. I said, well, why? He said, because people have been losing money for so long in their mutual funds, they hate mutual funds. You could actually buy stocks, which is just a fraction of a company, for less than the cash they had in the bank in 1982. Think of that. Company had $100 million in the bank. You could buy the whole company for $75 million, or stocks, which would be a fraction of that. And then you got the rest of the company free. You were buying dollar bills for 75 cents, and they threw in the company. This was a phenomenal time for people to buy stocks and bonds. You could buy a 30-year Treasury bond for 18%. 18%. You would get 18% for the next 30 years. It's never going to happen again in our lifetime, probably. That was a 100-year high in interest rates, October of 1982. You would have to go back to the 1880s to find interest rates that high again. Look at what happened then. For the next 40 years, you had a massive decline in interest rates. And interest rates actually got down to a civilization low. In other words, in human history, interest rates never were lower than they got to about a year and a half ago. Will that ever happen again? Probably not. They can't go down a lot more, I would say. I think everybody would agree with that, and it's in the news every day. Rising interest rates and rising inflation, because inflation and interest rates go hand in hand. Well, what happened with paper assets during that time span? They boomed. It was a bubble that got bigger and bigger and bigger and bigger. And I don't want to be a doomsayer, and I don't want to be like all the people that are telling you the world is ending. We're the United States. Nobody's ever made a lot of money betting against the United States, and I don't think that's going to happen now. However, those of you that are listening to this channel, for the most part, are in the retirement hot zone. You're a few years before or a few years after retirement. And if you don't deal with this, it's going to affect very negatively your retirement. We talked about the confluence of 78 million baby boomers going into retirement, along with the three financial tidal waves that are coming. So how do you deal with this? You have to have income. You have to have a way to convert your assets into income. And I'm going to say, make sure that it's increasing income, because otherwise it'll get eaten up by inflation. So if you like the content of this channel, click the link below. You can read about this in my books. Like this one, it's in the second edition, my best-selling book, Financial Success for the Smiling Retiree, or Tax Secrets for the Smiling Retiree. Both of these will be on sale around the holidays, so don't get them now. Wait till the sale comes out, and I'll let everybody know. Subscribe to this channel if you like this content, and if you have an urgent concern, you can click the link below to book a short call with me, and I'll see if I can help. I'm Navi Dowty, and remember, financial fitness can be beneficial to your wealth.